You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is time once again to check in on the world of futures options. It is time once again for TWIFO. This Week in Futures Options. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-compelling network upon which so many of you are binging and enjoying these days. All we ask, if you listen on the on-demand side, we know a lot of you do. You're busy, we get it. You're out there doing stuff, we get it. Then just rate and review the show wherever you get it, whatever platform. It's on pretty much everything under the sun, all the usuals, the Apples, the Googles. You listen on Audible? I know it's up there. No one's ever written to us saying they listen on Audible. You can do it on your Alexa smart device, YouTube, pretty much wherever you can get content these days. You can get our content. So if you like what you hear, keep rating and reviewing on your platform of choice. And of course, if you want to go above and beyond, you want to join us live, ask questions directly to myself and all the hosts and guests we have throughout the week, participate in our great exclusive content just for our members. So pro Q&As, options oddities, where we talk about unusual activity, get into a whole bunch of trading. Seems a lot more trading filtering into that show these days, which is fun. It's actually been kind of good for my wallet, so I don't mind it. And of course, all the giveaways and everything else that we do, theoptionsinsider.com/secret club. That's the place to go to begin your journey to the dark side. Let's see who's joining us on that journey today, holding down the CME Group and FTSE Russell hot seat today. We have our old friend, Mr. Todd Colvin, the Senior Vice President of Global Institutional Sales over there at Ambrosino Brothers. Todd, welcome back to TWIFO, sir.
Thank you, Mark. Thanks for having me on. It's good to be here. There's a lot going on in the world and over the last week or so. So I look forward to getting started.
I see here in my notes, my producers mentioned the last time we had you on was February 24th. An inauspicious day, Todd. Nothing much really happened that day, I don't think.
Nothing changed the global balance at all on that day.
Nothing at all.
Still doesn't.
So I'm a little nervous to have you back on because what other shoe can drop now that Todd's back on? I guess we'll find out as it is time for the Movers and Shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers report.
All right, everybody, welcome to the Movers and Shakers, the portion of the show where we break down what is lighting it up to the upside, aka the light side, and to the dark side over there at CME this week. Todd, you know the dance by now. I will say, looking at the report here, it is predominantly bearish, I would say. A lot of red on the screen, even though we can scrape together probably about a top 8, maybe a top 10 if we work really hard at it. You can see this report for yourselves, listeners, if you follow us or if you follow CME on Twitter. We do tweet it out right before showtime out there. So, Mr. Todd, where should we begin our journey this week? To the light side or to the dark side?
Let's start on a positive note. Let's go light side to kick things off.
Let's do it here. And Todd, I know you're huge in the ags. You love them. So you picked an interesting show to come on this week because all the upside is pretty much all ags.
I saw that.
With the exception of number 1, which I won't spoil yet. Number 5, listeners, SRW wheat. I wonder what could be driving the ags north right now. I have no idea. SRW wheat up 2.14%. Just to give you a little bit of frame of reference, listeners, to break into the bottom 5, you need to be up 4.62%. So more than double what we're seeing on the upside. Again, shows the gusto we're seeing and the amount of red we're seeing on the screen this week. Number 5, SRW wheat, 2.14% to the upside. Number 4, soybean oil, up nearly 4%, 3.95%. Number 3, our old friend oats, kind of a frequent offender, up 3.99%. This week, last week, goes number 5 in the same direction, up 2.1%. Again, before you ask, oats does like 3 contracts a week, so not much to really parse there. Number 2, KC wheat, up 4.59%. And lest you dismay, it's all ags all the time on the light side. Nay, I say to you, because number 1 with a bullet this week is our old friend NatGas, up 9.11%. It was number 2 in the same direction last week, up 6.17%. Man, just kicking the bears to the curb out there in NatGas land. Yeah, I've said it before, I'll say it again. If you guess NatGas, Bitcoin, or lumber on any given week, you have a good chance of being right in one of the directions, at least, somewhere over the course of the past week. And this week, it is NatGas taking the top spot to the upside. Now to the dark side we go. Give you a sense of how much dark side is on the screen. The E-mini Russell 2000 is off almost 3.5%, and it's not even in the bottom 5. It would be pretty much number 5 or number 4 if it was on the light side this week. But no, it's not even in the bottom 5. You have to be off 4.62%. That gets us to the Ultra 30-year. Number 4, again, name I just mentioned, Bitcoin off 4.94%. It was number 3 in the other direction last week, up 5.85%. Number 3, it's Brent, off 6.5%. It was number 3 in the same direction last week, off 9.5%. So a rough couple of weeks out there in Brent land. Number 2, the other one of my top 3 that I just mentioned, it's lumber. Again, you guess those 3, you have a good chance. And this week, lumber is number 2 to the dark side, off 8.27%. But even that is not enough to eclipse the number 1 dark side mover this week. It is heating oil, off 10.16%. It is number 2 in the same direction last week. It's off 11.14%. So a rough couple of weeks for the old heating oil. If you're wondering where does WTI fall in all this, it is right outside the Ultra 30-year. It actually would be number 8, off almost 4%, 3.95%. So it was also off pretty aggressively. Just again, it was a pretty aggressive dark side week. But all that, NatGas number 1 to the upside, heating oil number 1 to the dark side, Brent in there as well, WTI lurking in that range as well. It means we got to start in the energy first.
It's time to tap into the deep options well of black gold, Texas tea, NatGas, and more. It's time to talk energy.
All right, everybody, welcome to the energy section. You guys can find this for yourselves. Go to cmegroup.com/TWIFO, TWIFO. Go to that asset class drop down you'll see there. Scroll down 3, goes ags, then crypto, then energy. And then pop into the product family. Go down 3 more, from crude oil down to crude oil again, and then NatGas. and then go to the top product, natural gas, ticker LN. That's where we're going to hang out there today, listeners. And Todd, I was only half joking at the top of the show. You joined us last time on a very inauspicious day for everything, for the global geopolitical well-being, for the economy, for everything out there. Pretty much February 24th was very much a watershed day. So before we even get into today's action in energy and NatGas, let's start there. What have the last month and change been like for you folks over there at Ambrosino Brothers as you're navigating these insanely turbulent markets?
They are insanely turbulent. Volatility rising, I guess, is the one key theme we can talk about. And it wasn't specific to one asset class or another. It was an across-the-board rise. Uncertainty, this whole Russia-Ukraine dilemma, we'll call it, is really creating ripple effects, not only with the supply of food, as we saw in the lighter side as food prices are going higher, but it's the redistribution, the supply chains, the growth, potential growth harm that this could have globally. And this all amongst a period when our central bank is looking to raise rates very aggressively to fight inflation. So you've got a perfect storm here from a financial standpoint of everything going which way, and volatility has really reflected that over the last month.
Now let's get on out into the NatGas landscape. A lot of people were interested and or surprised by just what's been going on out there in NatGas. Of course, we've seen kind of a bit of a double whammy out there for NatGas. Some interesting pieces out there. Investing.com had a great headline that said NatGas beers mauled by a surprise U.S. chill and European LNG demand. Of course, they're right, kind of a bit of a 1-2 punch. People have been saying for a while, maybe we've seen a bit of the apex of NatGas for a little bit. Maybe we're going to start seeing that seasonality. Usually this time of year, listeners, we're seeing NatGas trend lower for a lot of obvious reasons. Most of the demand for heating in the U.S. is starting to mitigate. But of course, as they mentioned, we saw a pretty sharp cold snap. It was snowing here last weekend again in Chicago, so that always helps drive a little bit of NatGas action. And on top of that, they're talking about doubling down on banning coal and other types of energy imports out of Russia into Europe, which means they're going to lean even more heavily on U.S. LNG, which means there goes that price yet again. So kind of a 1-2 punch to the upside, and we're seeing that reflected right now over there in the NatGas reports. In fact, a lot of paper on the tape right now. By the way, NatGas right now about 6 3/8. I love saying the 3/8. You don't get to say that very often in the other products out there. That puts it up about 66.5 cents, or about 11.5% just since Monday. So if you go just for this week, which is, again, the name of the show, This Week in Futures Options, then it's up 11.5%. So it's outpacing even more. Of course, our reports, the movers and shakers, goes back to the end of last week's show. So interesting stuff afoot. In terms of paper, man, NatGas on fire. 717,000 contracts on the tape right now, listeners. And of that, NatGas doing its best impersonation of an equity right now. Again, kind of goes to show you how just near-dated a lot of this phenomenon is. 27.6% of the paper, over a quarter, going up in this front contract that has about 19 days to go. I mean, equities, that would usually be 1 day to go, so that's a little bit long-term for an equity, but still, it's the nearest dated contract NatGas has, and everybody is piling into it right now. What is the vol right now? It's ticked back up again, as you might imagine, back up to about a 65 1/3. It's up 9 points. That's a decent level for NatGas vol, but we have seen NatGas get a lot higher. We've seen NatGas blow into the triple digits not too long ago out there. So it's kind of hanging out at I'd say, slightly inflated level, but compared to what we've seen recently, it could have more room to run to the upside, certainly, especially if you see more shocks to the system out there. Skew-wise, we're seeing the puts. Last week, they were 5.5% cheap. This week, 4.1% cheap. So puts coming in a little bit, but not a ton. The calls, 7.6% bid last week. This week, 5.1% bid. So the calls coming in a wee bit as well. And in terms of action, listeners, I said we're at 6 3/8. Again, we were talking not too long ago on the show about how the action in the 7 calls was persisting all the way out to October and even beyond. And it's the 7 calls that we're lighting up again this week. Obviously, a lot more relevant of a strike right now than it was a few weeks ago. It's within spitting distance now. 7 calls doing 26,204 contracts in this April contract, this May contract that has about 19 days to go out there. So, yeah, of that, about 6,000 on Tuesday, 4,300 today, 3,000 on Wednesday. It's been, I take that back. That was the 5 puts. We'll get to those in a second. The 7 calls did a whole bunch of paper yesterday and today. 10,187 yesterday, 10,401 today. So just a ton of paper and only slightly opening yesterday. Shows what a fury of paper was going on that 7 strike, 5,400 on Tuesday, only 267 on Monday. So all this paper coming in the last few sessions. Followed hot on its heels by these 6 strikes, the 6 calls. Those now in the money calls doing 22,000 contracts. The big day today, 9,200 today, 5,100 on Tuesday, 4,300 yesterday, 3,300 on Monday. Again, back and forth opening and closing every other day out there. So a lot of back and forth paper on both of these strikes. Also active, the 6-10 calls, an interesting strike, doing about 15,000 contracts. The big day again today, 7,500 today, 3,000 on Tuesday, 2,800 yesterday, 1,500 on Monday. Same story, back and forth, kind of across the board. Let's go a little bit farther out. It's like it's that same story, listeners. 7 calls are active again across the board, all the way out to January of next year. 10,000 of the 7 calls trading in January of 2023. We also have the 10 calls, the 10 even calls starting to light it up with 6,400 going up in August, 3,500 in September. So we weren't seeing a lot of 10 call action before. It was mostly, it seemed like it was the upper bound was around 7. Now that we're threatening 7, it seems like we're seeing action on the 10 strike as well. So a lot of interesting upside paper afoot here across the board. Todd, what have you guys been seeing over there at Ambrosino Brothers in terms of NatGas, sir?
Well, when you talk about those 7 calls, a month ago, we were looking at those as more of sort of a black swan event when you're talking about the spring. And
they seemed pretty optimistic, did they not?
Yeah, it was almost like a defensive play. And then, as you can see, there was a clear short base that got squeezed out. Now you're talking about the 10 calls. So now with this whole new shift in paradigm, when you're talking about demand maybe shifting out of the U.S. and now into more so to Europe, yeah, there's gonna be a cost associated with that, and I think that those 10 calls now become the new 7 calls, like you said, and I think that's probably a level that you need to keep on your radar that you probably didn't think heading into the middle part of the year when nat gas is not really the most popular commodity that we talk about.
Let me ask you this, Todd. We have seen just an explosion of interest in natural gas, which is commensurate with the explosion in price action out there. People who traditionally wouldn't pay attention to natural gas, they've been seeing it in the headlines for months now. They've been seeing it in our reports and on shows like this, and they're starting to ask questions and starting to pay more attention. Are you starting to see a similar trend over there with your clients at Ambrosino, or folks who maybe traditionally weren't nat gas traders starting to call you guys up and ask about it? Or is it maybe the flip side? It's been so volatile for so long that they're a little bit spooked of it by now.
Well, anytime you take a product like this and it gets more news, it generates more interest. But the key to any product, any commodity that we talk about is price integrity and liquidity. And nat gas, while it has those things, is now just starting to see, I think, more of that liquidity. So I think as more liquidity comes in, as you see more participation, that is only going to help generate more interest.
Speaking of more interest, since we're hanging out here in energy now, listeners, let's flip the script. Pop back out of nat gas, pop up in the product family to crude oil. And let's go out to our old friend, WTI, because that, of course, is all the rage right now, and all the refined products. We're seeing the heads of Shell and other companies. That's as usually happens when crude gets around $100 a barrel. We start seeing the CEOs of the energy companies dragged before Congress, and that is happening again right now, accused of price manipulation, all these other interesting things out there. WTI back below $100 for the first time in a while. It's off about $3 or about 3% on the week, 96.30 or so coming into the start of the show. About 500,000 contracts on the tape. So that's a pretty decently active week. It's not blowing the doors off, but we usually see around 400, 410, 420 this time of week. So you're talking about 100,000 contracts more. So that's nothing to sneeze at out there right now. In terms of the action, it is pretty much, once again, like NatGas, doing its best equity impression, where the May contract that has, let's see, it has about, 7 days to go. That one's doing 38% of the paper. We're not going to hang out there. That's a little bit close to home. Let's go a little bit farther out. Let's go to the June contract, doing about 23, almost 24% of the paper. So nearly a quarter of the paper going up there as well. That has 40 days to go. So a little bit more meat on the bone there. If you're wondering what is WTI vol out there in June, it's about a 53 and a third. It's kind of off about half a point. So kind of staying roughly the same level it was this time last week. Skew-wise, the puts last week almost unched to the at-the-money. They were about 0.25% cheap. That's interesting. So no market bias in either direction for the puts last week. This week, they're about almost 3% cheap, about 2.7% cheap. So puts getting a little bit cheaper this week. The calls last week, 3.3% rich. This week, 4.4% rich. So the calls getting a little bit more bid. The puts getting a little bit cheaper as we're down about almost 3 points here on the week. And in terms of the action, what was leading the dance out here? It was the 115 calls in May that are going out in about a week. These did about 12,500 contracts this week. The big day was Tuesday, 6,500, 3,300 on Wednesday, about 2,000 on Monday, and about 1,000 today. Again, back and forth on this 115 strike. For much of the week, there's no clear bias in any direction for terms of opening or closing. Followed right behind it by the 90 puts. That's quite a strangle there, quite a risk reversal. The 90-115. 90 puts doing 12,200 this week. The big day for those was today, 5,500, followed by 4,400 yesterday, 1,500 on Monday, and about less than 1,000 on Tuesday. Again, back and forth every day this week. And let's see, right behind that, we have the 80 puts here, and that's what was driving a lot of the paper in June. The 80 puts going up 11,581 times this week. So that's a lot of paper out here. The big day for that was Monday, 5,400, most of that opening. So opening 80 put action on Monday, 2,100 on Tuesday, slightly closing, 1,500 on Wednesday, also slightly closing, and then about 2,600 going up today. So those 80 puts in June have actually been fairly active. What do you think about those, listeners? 80 strike by June expiration? We could certainly get there. Some people have argued when we did our WTI poll a few weeks ago that there is that seasonality in that midsummer period. The June may be a little bit early for that. Usually it's around July it seems to kick in, but interesting stuff afoot here in the June 80 puts. And let's look really quickly as well. Any other funky... Well, before I could even get that out of my mouth, the 210 calls we're trading. We're trading in November 840 times. Oh, another one of these, Todd. We got the 210, 245 vertical went up 700 times on Monday. It looks like they were opening on both. So 8, yeah, wow. And then it did another 140 times on Wednesday. So there you go. You want nonsensical strikes, lady listeners. 210, 245. How do you like that vertical? Todd, a lot's been going on out there in the world of WTI. What caught your eye this week, sir?
Well, I think as long as we continue to see this war going on in Eastern Europe, that's going to keep oil prices elevated, not only because of the risks that we see inherent geopolitically, but you've also got now this, again, a supply chain hiccup, especially if you're going to have to start getting your oil from somewhere else via cargo ships, via however you're going to get it from point A to point B. There's going to be a cost associated with that. And I think that these higher levels, once we see things cool off, and if we can find a way to generate a peaceful solution, a resolution in Eastern Europe, I think oil prices will come down, but I don't think they come down as quickly as we saw them going up. That's typically not the way it works.
But you know how this show works, listeners. We have to keep on rolling. Mr. Todd, you are our guest. I will allow you to choose where we go next. Which product complex is lighting up your tape, sir?
Let's head over to the metals.
I think we can make that happen. All right, metals, here we go.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, listeners, welcome to the metals. You guys know where to find this. Pop out of that asset class, drop down, scroll all the way down to the bottom of the list. That'll get you to metals, and head on over to the precious product family. And then, Todd, where should we hang our hat first? You want gold? You want silver? Something else floating your boat, sir?
I like the gold bucket today.
All right, gold it is. So drop into that gold product family, listeners, right now. Gold, as we kick off the show, 1937, so shy of that 2,000 level again, up about 13.5 handles, about 0.75% on the week. Todd, what's been lighting up your tape and the tape of your customers this week in gold, sir?
The very interesting thing about gold is since the March FOMC meeting, that's going back about 3 weeks, we've seen gold locked into a price range of $1,900 to $1,950. It's danced around both edges of that range. But as you mentioned, it's right in the midpoint of that range, $1,937, up about $13 today. That despite seeing a stronger dollar, higher treasury yields, and a Fed that is ready to roll out the greatest rate hiking cycle that we've seen in our lifetimes. And gold just doesn't believe it's going to happen the way the Fed says, or it's waiting for confirmation. But either way, a lot of the signals that we're seeing are bearish to gold, and gold just is shaking its head. I don't believe it.
Let's see what we're seeing out there right now in the gold options, listeners. By the way, 157,000 contracts on the tape in gold right now. So that kind of supports what you're saying out there, Todd. That's decent paper, but it's not blowing the doors off. So maybe the gold bug's playing a little bit of a wait and see out there as well. Coming to shutdown, like I said, 1937 is where we're hanging out in gold. And of that 157,000 contracts, 27% going up in that May contract that has about 19 days to go here. Let's see. By the way, gold vol has always been a bit of a slippery thing. You can catch it. It can get a nice little bid for a little while. Got to be pretty diligent about catching it and then getting the heck out of Dodge, because otherwise it can slip right back through your fingers. And it's kind of doing a little bit of that this week, off about 1.2 points, back down to about 14.5 in that May contract. And in terms of skew, a little bit of evolution on the call front, not so much on the puts this week. The puts last week, 3.6% cheap. This week, 3.5% cheap. The calls, 6.9% rich last week. And this week, 8.6% rich. And in terms of the action, it looks like the 20 half calls, 2,050 calls in May that were dominating the tape this week, listeners. You know what? I take that back. Actually, we got to go a little bit farther out. Something else has usurped it. It was, gotta love gold and their upside strikes. The 2,500 calls in Dees doing 6,300 contracts this week, Liz. That sounds like it's one part of a spread or vertical, so let's see if we can find the other leg. A lot of stuff going up in the upside, above 2,000 in December this week. The 2,500's doing 6,300 contracts this week. The lion's share of that, 4,155, going up on Monday, 1,000 on Tuesday, 1,000 on Wednesday, a couple of hundred today. Looks like opening throughout the week. So opening on the 2,500 strike here. Looks like there was some 22 half and 2,200 paper, but none of it lining up that well, and certainly not on Monday, where the lion's share also saw 27 halves going up 1,500 times. So it could be a strange 2,200, 2,500, 27 half. That could kind of line up a little bit like a fly, 1,300 by 4,100 by 1,500 times. But again, it doesn't line up that well. And again, this is just some of the crazy upside paper that we see going up all the time in gold. Any week, you could usually guess there's a vertical or a fly or something going up to the far upside in gold. Let's go back to those 20 halves in May. Those are a little bit more relevant to our needs here. 5,600 on the tape this week. The big day today, actually, 2,130 today, 2,070 yesterday, 700 on Tuesday, about 800 on Monday. Opening throughout most of the week. So opening action on the 20 half calls in May. Again, that's not a bridge too far. We have seen levels close to that not too long ago. We were north of 2,000 not too long ago. So 20 and a half, maybe not the craziest, most optimistic trade we've seen in the history of gold. It's certainly no 2,500s. That's for sure. We're also seeing the 2,100s going up out here in June, about 4,400 times this week as well. Listeners, looks like the big day for those was today. 1,500 today, 1,200 yesterday, 1,000 on Monday, about 500 on Tuesday. Todd, any of this gold options paper surprise you? And also, our listeners want to know, how many of these 2,500s did your AMBROSINO clients buy this week? So,
nothing in gold upside surprises me, because you've got gold bulls out there that have been calling for gold to be north of 2,000 long before it got up there. And I think at this point, those black swan type of calls above will always continue to be bought. 2,500 does seem like a reach, but not too long ago, 2,000 seemed like a reach as well. And I think at this point, we are going to continue to watch those calls. They tell us what we need to know about maybe a little bit of fear creeping back into the market, fear that we haven't seen in a long time.
Well, Todd, I know you're also a bit of a rates guy, and we have seen some action out of the Fed of late, so maybe we'll hang our hat in the rates next.
The Fed, the yield curve, inflation fears. How are they impacting options activity and volatility in your favorite interest rate products? Let's find out as we explore the world of rates.
All right, listeners, let's keep the party rolling. Pop on out of metals. It's hard to talk gold without talking the flip side of that, which is what's going on in the land of rates. Luckily, you only have to go up one product category. Go up one to interest rates, then select the U.S. rates from the product family. You'll see the entire smorgasbord of U.S. rates offerings there at CME. Mr. Todd, sir, we haven't talked to you really since the Fed came out and announced their, as you put it, I believe, the greatest rate hiking cycle we've ever seen out of the Fed. So yeah, we've seen a lot out of the Fed. We've seen more subsequently after they came out and said we're going to do it a quarter point at a pop. People maybe thought that was a little bit light. Then they came out the next week and said maybe that's kind of light. We're going to make it a half a point. And then we have seen just this week more strident, more hawkish statements out of some of the Fed governors. So I'm curious for you. It's been a while since we've checked in with you. What are your thoughts on what the Fed announced, what they then subsequently adjusted, and what they're saying this week, sir? A lot of talk and back and forth coming out of the Fed these days.
There's always back talk coming in and out of the Fed. That's what they do. They like to test the waters with their words, and then they follow with their actions. So at this point, we saw a March rate hike of 25 basis points. Now in May, they immediately started to price in 50 basis points. So looking at Fed fund futures, probabilities are telling us that no matter what they're telling us, maybe 25, maybe 50, the market is sold on a 50 basis point rate hike at the next meeting. What was a little bit of a surprise, I think, at the minutes that we got yesterday was perhaps the speed of their balance sheet shrinking, their quantitative tightening. That may have caught the market a little bit off guard, but as you can see by the shape of the yield curve, which went inverted and then flipped back positive, all in 1 week, is now starting to price in perhaps that they will be looking to shrink that balance sheet of $8.5 trillion. That's trillion with a T, maybe a little more aggressively than had previously been thought.
Yeah, let's see what's lighting it up out here. Is there a product that you particularly want to take a look at today? We can do 10-year, 30-year, Eurodollars. What's floating your boat today, Todd?
Well, the two areas, and most of the action that we're seeing is in the longer dated. So we're looking in the 10 and 30 year on the Treasury side, and then looking out at some of those reds and greens in the Eurodollar, some of the deferred months, given the fact that perhaps there may have been a little bit of a mispricing there when we talk about the inversion flipping back to being positive. So why don't we start in the 10-year there?
10-year, we can do that, listeners. Going to that drop down, select the 10-year. Has been a little while since we sunk our teeth into the 10-year, but it's doing some paper as it is wont to do. Nearly 2.2 million contracts on the tape right now. So we said about 170,000 contracts in gold, about 700,000 in WTI, 2.2 million in the 10 years. That gives you a sense of the levels of volume going up in these different products, listeners, at about 120.165 right now out there in the 10-year. And let's see, of that 2.1, almost 2.2 million contracts, 40% going up in the June contract that has about 43 days to go. What is vol in the 10-year? Well, 10-year not known for being an extremely volatile product. If you want vol in the rates, you kind of got to go to the Eurodollars. That's where we see, 50, 60, 70, triple-digit vol levels sometimes out there. Not so much in the 10-year, a little bit more of a staid product. That said, we are seeing a bit of a tick up, about 2/3 of a point to right about 8% in the June contract, which again, 2/3 of a point on an 8% vol, that's a lot. It's a pretty sizable increase for a product that is not known for a lot of volatility. In terms of skew, also seeing some interesting evolution out in the skew this week. Last week, the puts were 4.2% rich. The at-the-money this week, exactly double, 8.4% rich. So vol ticking up, puts getting a demonstrable bid. The calls last week, 2.3% cheap. This week, almost 5.5% cheap. So the calls coming in, puts getting bid. Let's see all this paper that's going up. Let's see if we can make a dent in it and see what the heck is going up out here. 120 even puts in June. Seemed like they were leading the dance by a country mile this week. 92,500 contracts. So again, that's going to be more than a lot of the other entire products we talk about. Silver, some of the smaller equities and other things. 92,000 is a lot. And that's just in the June 120 puts. Not even a full strike. It's just one option on one strike. 120 puts. Let's see. The big action was Tuesday. 46,500 contracts on Tuesday. Again, kind of coinciding with some of this Fed talk we've been seeing this week. And pretty much 15,000 contracts every other day this week. A total of about 92,500. Looks like slightly opening on Monday and the rest of the week was closing. Right behind it, we have the 123 calls. 74,000 contracts exactly going up this week. The big day was Wednesday for this one. So a day after the 120 puts, doing 33,000 on Wednesday, 20,000 on Tuesday, almost 20,000 again today, and about 700 on Monday. So light day on Monday, but looks like it was pretty strongly opening throughout earlier portions of the week. Then we have behind that, we have the 124 calls. Again, this is all in June, listeners. 61,000 going up this week, the big day for those. Tuesday, 29, almost 30,000 on Tuesday, about 14,000 on Wednesday, 9,000 on Monday, and about almost 9,000 again today. So a lot of paper out here in the 10-year. Todd, any of that surprise you? Are you seeing any interesting inquiries or trades coming from your clients over there at Ambrosino in the 10-year these days?
They're buying puts with both hands, and they have been for a long time, and put buyers have not been rewarded. As you've noticed, yields have been stubbornly low outside of this last move we've seen since the beginning of the year. And I think at this point right now, you're trying to gauge is, will the Fed be as aggressive as the market is now seemingly pricing them in to be? And a lot of this can change. Now, treasuries don't change as quickly as, say, some of these other commodities like NatGas, and they don't turn on a dime. But we do see big shifts if the market isn't ready for it. And I think some of this calls that you're talking about are buys on the cheap, given the fact that call skew is cheap here. Vols are still a little bit elevated, but they are able to buy calls cheaper than maybe they were a week ago. So at this point, or a few weeks ago. So at this point, I think that some of that is protection against a reversal and perhaps the Fed not giving us what the market is pricing that they will.
All right, Mr. Todd, looks like the markets are giving us a strong rally now after having sold off for most of this week. So let's get into that next. It is time to talk some equities.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, listeners, you know where to go next. Pop into that drop down. Pop out of rates, go up 2 slots to equity indices, then go to the U.S. Index E-mini. We're going to be hanging out in there first. Todd, a lot going on in the world of equities, as you mentioned at the top of the show, a lot of tumult. A lot of vol, then the vol starting to come off as you started to see some rallies out there. One of these stranger post-Fed announcement rallies we've seen in a while. And then the Fed starting to get a little bit more hawkish and the market starting to turn a little bit to the dark side over the course of the past week or so. What's been lighting up your tape out there as we've seen a lot of turbulence in the equity markets, sir?
Well, 2 things. And first of all, the volatility levels of the equity market don't reflect the greater macroeconomic picture that we're painting here, because the VIX index was, days ago just below 20, and now it's just above 20. So the pulse of the market is not giving you any sort of indication that there's any fear or concern priced in. Likewise, equities, well, we concern about everyone's concerned about pullbacks in equities. What is that going to do to my bottom line? We are still a stone's throw from the all-time highs. So the pullbacks we've seen are nothing to what they could be if and when the Fed starts raising rates and some of that stock money moves into higher yielding treasuries, which eventually it will, but it hasn't yet.
You're right. For all this hand wringing we've been doing, Todd. Oh my God, all the movements. We're still at a 4,500 in the S&P, right? We didn't even break 4,000 in the teeth of the sell-off back on March 14th. So people forget, not that long ago, election night, we were 3,300 in the S&P. And in the depths of March of 2000, which let's hope we don't address those again, but we were well below that, Todd. So if this thing wanted to sell off, it certainly has a lot more room to go to the dark side. So all this hand-wringing at 4,500, a couple of 100 points in the S&P away from the highs. It's a pretty muted sell-off, even though I know in some of these smaller names, the sell-off has been much more pronounced out there. Speaking of smaller names, let's head out there now. Let's go out to the Russell 2000, go into that drop-down, listeners, go into the E-mini Russell 2000. You'll see where the action is this week. Like I said, a pretty dark side week for the Russell 2000, yet couldn't even break into the bottom 5. That's how aggressive this week was on the red side. Right now, coming into showtime, Russell 2000 still back over 2,000, if ever so slightly, 2,009.60 out there. So yeah, just hovering right above the 2,000 level, off 78, almost 79 handles of the week. It's another about 3.75% just since Monday's sessions. Obviously a pretty red session. Today, sell off. It was off over 1% today. I think we have mitigated a lot of that now. In terms of the action, like we're seeing in most equities, it is pretty near dated. 25% of the paper going away in the April contract that goes out in about 7 days. Let's go a little bit farther out. Let's go to, and we have 20% going away in a day. So that's just the way the equities play, listeners. Let's go out to the end of month April contract. It has about 8% of the paper there. That's a little bit farther out for us. It has 22 days to go. The vol out there is about a 24. So actually, before I even do that, I got so excited with the equities, I forgot to set the table from a vol perspective. So let's do that now. Coming at the start of the show, we had RBX, so the VIX of the small caps, at about a 28.10. That puts it up a little over 3/4, actually about 0.85 points from this time last week. So kind of staying firm and not really moving a heck of a lot. VIX up a wee bit more. VIX is at about 2280 when we kicked off the show. It's up about 2.8, almost 2.9 handles. A VVIX at about 115.5. That puts it up 5.5 points from this time last week. A vol Q, 26 1/3. It's up about 2.7 points from this time last week. That puts that VIX to RBX spread about 5.1/3 points. That puts it actually, looks like a little bit wider, 2.04 points wider than it was this time last week. A VIX to vol Q, 3.5 points. That's about slightly tighter to unched from this time last week. All right, and in terms of, let's see, in terms of action out here, like we said, it was the, let's go out to the May contract. That has 43 days to go. That did 23% of the paper out here. So a little bit more action there. That's where the 2170 calls were lighting it up this week with a fair amount of paper out here. So people are always asking about small delta calls. 2170s in May, not that small, but they are smaller deltas. And we're also seeing 2110 calls going out this week and 2190 calls going out in 7 days, where a lot of the action was. So it still is upside calls. I don't see those big footprints we were seeing last week. I don't see those going up this week. It seems like it's all 2100 and above level calls that seem to be leading the dance out here. Also 2230s going up in June quite a bit this week as well. So again, upside calls pretty much across the board where the action was in small caps this week, listeners. And let's see, I can hear you crying out, all you ag heads out there. So I'll give Todd a break and I'll take a quick journey into the ags next.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, everybody, welcome to the ags. In this case, we're going to get out of the equities, pop up to the top of that list, the ags section, pretty easy, agriculture. Then go to the grains and oil seeds at the top of the list. Then go down to SRW wheat. You may say, why? Why SRW wheat? SRW wheat was only number 5 on our movers and shakers this week, up 2.14%. KC wheat was number 2, up 4.59%. And you are correct. But also, when you look at the actual comparative numbers, Chicago wheat, a.k.a. SRW wheat, blows the doors off KC wheat. KC wheat's done about 13,000 contracts so far this week. Chicago wheat, 53,000. So that's where the action is. We're going to hang out there this week. Again, put all this in perspective. That's not even as much as I think the 120 puts we saw on the 10-year. So again, put all this in perspective out there. But you ag folks have been writing in and asking a lot these days for more ag. So we'll see if we can get that into the rotation this week. Right now, SRW wheat, 1021 and a quarter, up about 3 3/4% just this week. 30, 36, almost 37 handles this week. Of that, unlike the equities, 43% is going up in the contract that has, a nice 15 days to go. Not the contract that goes out tomorrow or the contract that goes out next week. So that's nice to see. A little bit longer term. And of that, let's see, what is the vol out here right now in Chicago wheat? It's about 41, off a little over 2, about 2.2 points. So still pretty frothy for wheat vol. But then again, given what we've seen out there of late, it's hard to argue. I mean, the wheat was crazy for a while there. How high did see if I can get it here. Yeah, we got in the teeth of that madness, listeners, all the limits in early March. We saw at the money vol in wheat, the strike was 1135 and the vol was 162. So we're talking roughly a fourth of that right now. My goodness, how crazy that vol got out there. In terms of the skew, the puts, Last week, 4.2% cheap. This week, coming in a little bit, 2.3% cheap. The calls last week, 6% bid. This week, 4% bid. So the call is still leading the dance, but coming in a little bit. And of that action, let's see, what was the big song and dance this week? It actually was a little bit farther out. It was in the July contract that has, about 78 days to go. That 1,200 calls. So back up to those frothy levels, perhaps in wheat. It looks like they were taking them off. 1,600 trading on Tuesday and, about 1,000 on Wednesday. And so we have a total of about 2,500 of these going up this week. So looks like people maybe getting the heck out of Dodge on the 1,200s, deciding perhaps discretion is the better part of valor out there. And let's see what else. Also have the 1,200s are pretty popular this week. Also trading in June about 1,300 times. And also trading about 1,000 times in December. So 1,200s kind of across the board. That was pretty much where the action was this week here in all things Chicago wheat. Also worth noting, there was some action in the May 1100s, 2,163 going up this week. 1,000 of those yesterday and about 500 each Monday and Tuesday. Not so much going up today. So about 2,100 and change on the week. It looks like most of that opening. So opening 1100s in the May cycle. It looks like maybe closing a lot of 1200s a little bit farther on down the road. So intriguing stuff. Again, we got close to those levels not too long ago. So interesting stuff. Maybe some folks finally deciding 1,200, a bit of a bridge too far, at least for now. But again, there's a lot of question marks right now with the ags in Eastern Europe, right? What's going on with all the wheat? Obviously, no new planting is happening when shelling is happening. The fields are getting destroyed. Can they even be replanted in a reasonable time frame? So a lot of questions out there. Can the rest of Europe's production, can U.S. production, can that make up for some of those shortfalls over there? All these questions being sorted out right now. And speaking of sorting things out, it is time to sort out your questions. It is time for your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody. Welcome to your feedback segment. Let's start. Todd, I want to get your thoughts. We have a kind of an interesting outside of the box question of the week for our audience this week. We asked them this week, Todd. Many people thought inverse volatility products died alongside XIV back in 2018, but the launch of SVIX last week has rekindled this debate over whether these products should even exist. If you don't know what we're talking about, listeners, these are products that are effectively short VIX, so short vol all the time. So interesting. Think about that from a risk perspective, what you need to do to mitigate that risk. And maybe it's not surprising why one of these products went the way of the dodo back in the great Volmageddon of 2018, and why no small number of people in the business maybe think they shouldn't come back. So we asked you guys, should they even exist? We gave you two choices, very simple. Yes, they serve a purpose, or no, they are too dangerous. And Todd, right now, about 80% of our audience saying yes, they serve a purpose, and no, only 20% saying they are too dangerous. I'm curious for you, Todd, where do you fall on these somewhat esoteric Franken products? Did you have a lot of clients back in 2018 get caught up in all this XIV short VIX fiasco, sir? And what are your thoughts about a new one being approved and getting listed last week?
I think that when you're talking about any kind of market changes, you want to keep it balanced. Adding a short side only builds probably some more interest. To get long vol, we understand what that is. But if you want to represent a short vol position, this gives investors an opportunity to do that. And I think at this point, we've learned a lot since 2018. Obviously, the market matures every day. So do market investors. And I think at this point, adding another way for investors to represent their opinions is only a good thing.
All right, let's see. Like I said, our audience so far are agreeing with you. 80% saying yes, only 20% saying no. Let's hope they have solved a lot of those issues. I want to get those folks behind SVIX on maybe our Vol show coming up soon, so I could pick their brains a little bit about how they brought this back to life, what safeguards they're putting in place to prevent a repeat of Volmageddon. Speaking of safeguards and problems, Todd, let's go to this question from Marchex. This is up your alley as our broker representative on the show today. He says, hello, TWIFO program. Hello, Marchex. He says, I've had a few margin calls while trading stocks and options on stocks. So I'm familiar with the process, unfortunately. Well, I'm sorry to hear that, Marchex. He says, my question is, can you still get a margin call when trading an option on a future versus a stock? Thanks. Still trying to figure out this whole futures options thing. Mr. Todd, maybe if you want to, like I said, as our duly appointed broker representative on the show today, if you want to do a quick overview of the margin call process with options on futures, have at it, sir.
Options on futures are treated exactly the same. So if you're purchasing an option, you pay the premium. That's your margin right there. You don't owe any more. But if you're short an option and the option gets away from you, say during a Volmageddon type of scenario, yes, you are going to be responsible for maintaining your margin with whatever your clearinghouse requires in the exchange. So yes, there is no free ride here. You don't get to pass go and collect 200 just because you're dealing in the futures world as opposed to the equity markets.
I think people have some mystical perception. The futures options are entirely different, Todd. They don't work the same. Yeah, if you buy an option, that's pretty much your risk, right? It's very straightforward. And shorting options work pretty similarly as well. So yeah, unfortunately, if you're familiar with that process, and it sounds like you are, and again, you don't want to be too familiar with the margin call process, but it sounds like you are. It's going to work in a very similar process. So if Todd's got to call you up for the margin calls, it's going to be pretty similar. Todd, you have to do any margin calls over there at Ambrosino? Or they kick that off to somebody else?
No, we don't do that. No, that's as an executing broker, we are the ones who facilitate the trade. The clearinghouse deals with all the behind the scenes.
Oh, that's good. You don't have to make more. That's not a fun job. No one wants to make the margin call. All right, let's keep on rolling. Let's go to Ellen and Mackenzie. Both have kind of related questions. I guess we can kind of lump these together. First off, Ellen, do you have any updates on the new CME micro Bitcoin and ETH options? And then Mackenzie wants to know, now that micro options have launched at CME, how do you feel they compare to the other major optionable product for U.S. traders, BITO? And do you have a preference? Maybe, Todd, we'll start with you on your thoughts on this. I know you have a lot of clients starting to hit you up over there at Ambrosino on the crypto front. One of the problems was that the products they had were too freaking big, I think is a technical term. So a lot of clients just couldn't trade them. Now they have micro futures, and they just about a week ago launched the micro option. So it's still very early days, but do you have any thoughts on this growing ecosystem of micro crypto products at CME? And have your clients started to pick up on these things?
Not quite yet, but I think you can look at it the same way we looked at the S&Ps back in the day. You had the big S&Ps. They were really more for institutional investors and a gauge. And then you introduce the E-minis, and that opens the door a lot cheaper, obviously, a lot less expensive to participate. And that obviously opens the doors to a vast number of different investors. I think these micro cryptocurrency products will do the same. We want to see more people involved in the products. Obviously, there's a learning curve there. But at this point, the more you get in there, not only the more do investors like and participate, but it makes the market more efficient to have more participation.
To answer your first question, Ellen, we haven't seen a ton of volume yet on these, and we're still waiting for these to kind of propagate through to our TWIFO reports. So they're kind of a new listing, obviously, so they haven't really percolated their way through yet on the list here. So as soon as we have more data on exactly what's lighting it up on these micro options, again, they're only a week old, so kind of early days still. Once they start propagating through our reports, we get a little bit more volume on the tape. We could speak a little bit more coherently about these things. We saw a decent uptake, though, on the micro Ether futures side, and they only listed back in December, and they already have decided to list options on them. So clearly, CME was in a place where they were comfortable with it. So I think they will get there, even again, it's only about a week. And in terms of Mackenzie, a lot of people have been asking about BITO. I feel like I've been talking about BITO all week here on the network. But yes, right now, how does BITO compare, she wants to know, to the micro options at CME? I think for right now, in terms of liquidity and, spreads, it's kind of hard to compete with BITO right now. BITO is averaging around 60. In fact, pulled it up to 62,000 now, 62,000 contracts a day. You're just not seeing that yet in the micro. And it's going to be some time before we get anywhere close to that. So if you want tighter spreads, more liquidity, BIDO is the way to go. Now, obviously, BIDO, you're talking tangentially related to what we're talking about here because they are off the CME big futures. So you are still trading around those CME futures at the end of the day. And all the standard caveats apply that we've said about BIDO many times. There's that negative roll yield. It's going to drag on that product somewhere around 10 to 20% a year. I mean, the numbers kind of move all over the place depending on the contango. But if you're going to buy and hold BIDO, just be prepared for a pretty substantial headwind on that. But if you're coming in to trade collars, to trade risk reversals, to trade verticals and different types of spreads, there is liquidity there. And so for a lot of our U.S. audience who are waiting for the volume to materialize on the CME products, maybe they haven't taken the full leap to the dark side yet and jumped into the futures and futures options markets. BIDO is a very decent surrogate for that. Remember, just keep it short term, get in and out, get a little bit, you take advantage of some of what's going on out there from a liquidity perspective. If you buy and hold BIDO, it's a little bit more challenging, but we can talk about some strategies for that too. In fact, we have all week. Check out some of our pro Q&As and options boot camp that we had earlier this week there. But still intriguing stuff here in terms of the micro options. We're trying to dig these up on the fly for you, listeners. It's like about maybe CME saying they have seen, this is the official quote from CME, micro Bitcoin and micro Ether options have gained momentum since their debut. In their first week of trading, over 20,000 total contracts traded with on-screen activity across different regions and expirations. So that's interesting out here. Again, I'm not seeing that reflected in some of these charts. I'll have to dig in a little bit more, but interesting stuff. If they're seeing 20,000 total contracts across micro Bitcoin and micro Ether options, that shows that some people are coming to play out here. Again, it's not BIDO yet, but it's got a ways to go before it can get there. So give it some time. It'll certainly, I think, become an interesting one to watch. All right, everybody. You know what that music means. Unfortunately, that brings to a close our broadcast day for today, but don't fret. We'll be back at you again tomorrow, noon Central, 1 p.m. Eastern, to talk all the great volatility out there. So that should be an interesting one to get into. And, of course, we'll be joined by our buddy, Mr. Jim Carroll out there from talk all things all things vol. So that should be kind of fun. And, Mr. Todd, before we go, if you have folks want to check you out over there in the land of Ambrosino, maybe reach out to you, where should they go? What should they do, sir?
Two places, tcolvin14 at Bloomberg.net. I'm on the Bloomberg Network. I'm also on Twitter at TJC1539.
There you go. Check them out over there at Ambrosino Brothers as well, listeners. And, of course, you know where to go. Check out all these reports we're talking about all show long. CMEgroup.com/TWIFO, TWIFO, and /TWIO. Both of them will get you started on your journey to the dark side of futures option. Just be warned. The slippery slope. Once you get in there, it's hard to get out. You're going to want to check out this one, and maybe you want to check out Fluid Milk. And next thing you know, it's 3 a.m. But you've seen a lot of cool stuff. So CMEgroup.com/TWIFO is the place to go to begin that journey to the dark side. And of course, you know where to go to learn more about all things small caps. FTSERussell.com, FTSE Russell.com is the place to go to kick the tires and light the fires on the COVID Impact Center to see what's going on with Recon. Yeah, we're coming up on those days as well, listeners. So Recon, a bit of a market mover out there. So stay tuned for all the dates and all the announcements for all of that. Give them a follow on the old Twitters as well, at FTSE Russell, FTSE Russell, all one word. They put out a lot of great data in between episodes of this show. See you back here tomorrow for Volatility Views, and then back again next week, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, Visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.